Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 15th of May. I'm Daniel Lam, your host for the podcast. We have been spending most of our time discussing the US over the last few podcasts. Today, we're shifting our focus to China, especially given the important macro data coming out tomorrow, such as industrial production, retail sales, and fixed asset investment. If you look at how US macro data has been behaving, you will notice that the US data is already, quote-unquote, moving along the script, i.e. falling inflation and slowing, but not collapsing growth. However, Chinese data has been very different from the developed markets. Instead of high inflation, you are seeing disinflationary pressure in the economy. The Chinese CPI figure last week slowed more than expected, and PPI also dropped more than expectations. Likewise, the import figures and the Caixin Services PMI were also weak. That has led to poor price action in the Hang Seng Index last week, with the index testing the key support zone between 19,000 and 19,500, after failing to overcome resistance at 20,300. However, we do believe this could be a buying opportunity for Chinese equities. We believe consumption in China is recovering. For example, China's May Day Golden Week showed that single-day rail ticket sales, the number of trains operating, and tourist site ticket sales all rose to record highs. Almost 20% more people traveled during the 5-day holiday versus the pre-pandemic year's May Day holidays. However, per-traveler consumption was lower than in 2019. But the good news is that the leadership recognizes the challenges in sustaining the recovery in domestic private demand. The Politburo's statement after its meeting on the 28th of April was pro-growth. We expect more targeted measures to boost sentiment and youth employment and to revive private sector business confidence. We see attractive value in Asian US dollar bonds, Asia ex-Japan, as well as Chinese equities, especially in China's growth sectors such as technology, communication services, and consumer discretionary. China assets have underperformed year to date, likely due to geopolitical concerns. But we do see rising policy support and improving fundamentals leading to an outperformance in the second half of the year. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.